Hi, this is Kathy, and this is the anticipated scenario for tomorrow, February 11th. So, looking at SPY is approaching a retest of a shark rejection point, or a PRZ. Okay, so this is going to be a double top and a line in the sand for this opposing green pattern. So, how price behaves here is important. I would anticipate if it's going to reject this, retest, a pullback to validate the bullish cross, right? Any upside continuation has convergence at 207.81 and up here at the 209 region. There will be scaling points along the way as noted with these noted levels, right? Because each one of those has the potential of being a rejection point. So right now the bias is to the upside, but as it approaches each important resistance test, watch for a pullback and how much it pulls back. I wouldn't look for a shift in bias or to test the downside of the range until price can break below 205.94. Okie doke. If so, then watch for a retest of this most previous low, 204.13, and below there is heavy confluence. It's a double PRZ at 202.55 region, providing that this 207.24 is not taken out. If that doesn't make sense, what it means is if price breaches this 207.24 even by a tick, I'm going to erase this green pattern, okay? The 5-0 will still be there, but it will no longer be a double PRZ. Only as long as price holds below 207.24 with that magnet target down there that increases in probability with each breakdown of each one of these levels, would that be a double PRZ, okay? I think that pretty much covers that. Okay, here we have gold futures. Now, the initial test of this deep crab that had confluence with an ABCD 127.2 convergence there at the 1228 region had a very, very shallow retracement, right? It couldn't even make it to its ideal minimum retracement target of that crab, which was 1250.5. Now, in the meantime, what's going on is we have a new opposing emerging patterns. So either a new ABCD or this blue emerging pattern, which is going to start out as a bat. What's going to be determined is whether this 1228.2 holds or not. Hold on, I need to adjust. I did that backwards for that ABCD. Hold on. Okay, that's fixed. That would have driven me crazy. All right, so what we're wanting to see is price going to be able to hold above 1228.2? If so, the initial resistance test is going to be this golden ratio zone level, 1239.1. Above there increases the probability of 1, retracing that green pattern at least to its ideal minimum target, and 2, complete a smaller pattern. Now, what's going to be interesting is a completion of this blue pattern. The targets are noted: bat rejection point, alternate bat, and the crab. Those tests or completions of those patterns is going to help that green pattern have lovely retracements. Okay, now the bias is to the downside, and the longer that I'm sorry. As long as price holds below this 1228.2, the probability increases of reaching these ABCD targets, okay? Once that occurs, once we take that out, I'm going to erase this blue pattern and forget about it, right? And the closer we get to these ABCD targets, the more I'm going to then I'll just forget about retracing this deep crab, okay? What that means is just because it completed a bullish pattern does not mean it's a guarantee that it's going to go into a bullish direction. Sometimes it's merely a target en route to lower targets. Okay? So this is an important decisive point, just like everything else, in this region between 1231 and 1228.2. Alrighty? Oh, The downside bias will increase in probability of a bias shift once it can hold first above this 1239.1 and then more importantly above 1245.9.